is our second lesson, national income. In this lesson, we'll be learning to understand the meaning of national income and some basic concepts of national income. And also, we'll be knowing the various methods which are helpful for calculating national income. Importance of national income analysis. See, nowadays the national income is regarded as an account of the economy, which is also called as social account. So let's learn various importance of national income. First point is importance of various sectors of economy and their contributions. So national income is relatively important from various sectors of the economy and their contribution towards national income. For the calculation of national income, we could find how income is produced, how it is distributed, how much is spent, how much is saved, and what are taxed. Everything will help us to find the analysis of national income. Second one is formulate the national policies such as monetary policy, fiscal policy, and other policies. The proper measure can be adopted to bring the economy to right path with help of collecting national income data. So it helps in formulating various plans and procedures, policies in order for bringing the right path for the national income. The third one is to formulate planning and evaluate plan progress. So it is essential that data pertaining to the country's gross income, output, savings, consumption from different sources should be available for economic planning. So all these planning platforms should be available to pertain in the economy. To know a country's per capita income, which reflects the economic welfare of the country. So it provides income in whether it is equally distributed or not. So equality is maintained under national income. And fifth one is it builds economic models. So it builds economic models both in the short period and also in the long period. Next one is it makes international comparison. So it makes international comparison between inter-domestic regions and inter-temporal comparisons. Comparisons of the economy during a different period. And seventh one is to know the distribution of income for various factors of production. So it helps to know the distribution of income from various factors of production, whether the income has been accumulated or calculated, it has been proceeded, so that will be calculated under national income. And it also helps us to arrive macroeconomic variables. What is macroeconomic variables? Large scale variables like in the form of tax, GDP ratio, current account deficit, GDP fiscal deficit, GDP ratio, GDP debt to GDP ratio, etc. So we can make study under the large scale under national income. Difficulties in measuring national income. Though there are many advantages, but there are few disadvantages in calculating measuring of national income. First one is transfer payment. As I've already told you, what is transfer payment? It is the amount which is given by the government to the government makes payment in the form of pensions, unemployment allowance, subsidies, etc. See, it is given by the government and the people need not refund the money back to the government. So these government expenditures, but they are not included in the national income because they are paid without adding anything to the production process. So during a year, interest on national debt is also considered as transfer payment because it is paid by whom? By the government to individual or to the firm or to the past savings without any productive work. And second one is difficulties in accessing depreciation allowance. See, the deduction of depreciation allowance, accidental damages, repairs and replacement charges from the national income is not an easy task. It requires high degree of judgment to access the depreciation allowance and other charges. So what is depreciation? It is reduction in the asset value. So depreciation charges is also like replacement charges. All these are not becomes a problem when calculating national income. Third one is unpaid services. See, for example, a housewife or your mother, okay, renders a number of works or useful services like preparation of meals, serving, tailoring, mending, washing, cleaning, bringing up children, etc. So she is not paid for them and her work is not directly included in the national income. Such services performed by paid servants are included in the national income. See, household wives are not paid, but the paid servants does the same work, they are paid, okay. But these and all are not calculated in the national income. So the reason for the exhaustions of these services from national income is that the love and affection of housewife is performing her domestic work cannot be measured in the monetary terms. Similarly, there are a number of goods and services which are difficult to be accessed in money terms from the reason above stated, such as rendering services to the friend, painting, singing, etc. will be calculated. So that leads a confusion. What service has to be included, what service has not to be included. So this becomes a complete confusions under national income. The fourth one is income from illegal activities. See, what are the illegal activities? Income earned to illegal activities like gambling, smuggling, okay, so extractions of liquor, all these are not included under national income. Such activities and the value have value and satisfy the wants of the people, but they are not considered as a productive from point of view in the society. So though these are illegal activity, they are being sold in the market, they have been purchased by various people also, but this is not this makes a problem in calculating national income. Next, production for self-consumption and changing prices. See, farmers keep a large portion of food and other goods produced on their own farm for self-consumption. So that is the work of every farmer, isn't it? They keep a portion of food under their control. The problem is whether the part of the produce which is not sold in the market can be included in the national income or not. See, they keep a large portion for themselves for self-consumption. The problem comes here whether these production, these saving of goods is included under national income or not. National income by product method is done by what? Agriculture method is measured by the value of final goods and services at current market price, but price do not remain stable, they rise or fall. To solve this problem, economists calculate the real national income at constant price level to the consumer price. And the next one is capital gains. So the problem also arises with regards to capital gains. Capital gains arises when capital assets. What are the capital assets? Like house, your own property, stock, shares, etc. When it is sold at higher prices, then was paid for it at the time of purchase. So capital gains are excluded from national income. See, when you buy a plot of land, so maybe it is 5 lakhs at the year 2000. Okay, but same plot of land, when it is sold at 2020, what happens? The same 5 lakh land has transformed its value for 50 lakhs. So there is a change in the capital gain. So this and all is not every year, it goes on changing. It's not included under national income, becomes a confusion. And the last one is statistical problem. There are statistical problem too. Great care is required to avoid this double counting. Double counting, as we discussed yesterday, what is that? Double counting earlier. Twice the time the values are calculated, so it should be avoided under national income. So statistical data may not be perfectly reliable when they are compiled from numerous sources. Skills and efficiency of the statistical staff and cooperation of people at large are also equal. So it is important in estimating national income. Many problems which are under statistical problem, like people of India are indifferent in the to their official inquiry. They are the most cases non-cooperative also. Like statistical staffs are untrained and inefficient. There will be different language, different customs, and also it creates a problem in computing. So various problem exist under statistical problem also. So therefore national income estimates in our country are not very accurate or adequate. There is at least 10% margin of error. So national income is overestimated or underestimated by at least 10% in the economy. So that is why the GDP estimates for India varies from $2 trillion to $5 trillion. Let's discuss the next topic, social accounting and sectors. See, social accounting and sector. Under this method, economy is divided into several sectors. Okay, like a sector is a group of individuals or institutions having common interrelated economic transactions. So these are divided under firms, household, government, rest of the world, and capital sector. Let's discuss one by one. Let's take firm. What is firm? A small unit or an industry. So firm undertakes productive activities. Thus, they are all organizations which employ the factors of production to produce goods and services. Okay, so the firm is a place where goods and services are produced for satisfying home for the consumer. And the second one is household. Who are household? We consumer who consumes the commodity are called to be households. So households are consuming the entities and represents the factors of production who receives payment from service rendered by them to the firm. Household consumes the goods and services that are produced by the firm. So this firm makes payment to household for their services. Household spends money income they receives on the goods and services produced by the firm. So it is always a circular flow, as we already discussed in the previous chapter. So between two groups, two sector model between the firm and household. Okay, right. The third one is how government sector. So you have learned this in three sector model. So it is a connection. The government sector refers to the economic transaction of public bodies at all levels namely center, state, and the local. In their work, it's concerning social accounting. See, the main function of the government is to provide what? Social benefit, isn't it? Social welfare like defense, public health, education, etc. Okay, so this means satisfying the collective wants of the society. However, public enterprises like post office and railways are separate from the government sector and are included as a firm. Okay, and the fourth one is fourth sector economy. What is related? Rest of the world. Okay, so it relates. The rest of the world sector relates to the international economic transaction of the country. It contains income of export and import transaction, external loan transaction, and allied overseas investment income and payments. So rest of the world is also included under social accounting sector. And the last one is capital sector. So capital sector refers to the savings and investment activities. It includes the transactions of what? Bank, insurance companies, corporations, financial houses, and other agencies of the money market. So these are not included under firms. These agencies merely provide financial assistance to the firm's activities. Therefore, the concept of social accounting has gained importance as a result of high-level industrialization, which has brought prosperity as well as many problems of the society. So, it has necessitated the corporate sector with huge amount of funds at their disposal to invest sustained amount in the social activities. In modern times, accounting efforts have been extended to assessment of the state of the society. So this social accounting has also initiated the allocations of resources towards better social well-being. So let's conclude this. Social accounting is also called as social responsibility accounting, socio-economic accounting, socio-reporting, socio-audit aims to measure and inform the general public about the social welfare activities undertaken by enterprises and their effects in the society. Next one is national income and social accounting. So national income is also being measured by the social accounting method. Under this method, the transaction among various sectors such as firm, household, government, etc. are recorded and their interrelationship are traced. So national income is related with what? Social accounting, society. Okay, this social accounting framework is useful for economists as well as policy maker. So it helps to forecast the trend of the economy. So it represents a major economic flow and statistical relationship between the various sectors. So it paves a way for forecasting the future of the economy. National income and welfare. See, national income is considered as an indicator for economic well-being of the country. The economic progress of country is measured in terms of GDP per capita and the annual growth rate. The country has a higher per capita income is supposed to enjoy greater economic welfare with higher standard of living. So it is normally understood what? Higher per capita income, higher standard of living, and higher standard of living leads to higher economic welfare. So it is depending on GDP or per capita income. It's not always to promote economic welfare. The per capita income indicates of economic welfare which suffers from certain limitations. Let's discuss the limitations. Let's see the limitations. Economic welfare depends upon the composition of goods and services provided. The greater the proportion of capital goods over consumer goods, the important in economic welfare will be lesser. So, the production of luxury is meant only for whom? To the rich normally. Second one is higher GDP level. So higher GDP will be greater environmental hazard such as air, water and soil pollution will be little economic welfare. It does not create more economic welfare because it is hazardous to the nature. And third one is the production of war goods will be shown the increase in the national output but not welfare. See, if they use the production for the war purpose, it will be used for increase the national output but not for welfare. An increase in the per capita income may not be due to employment of women and children focusing workers to work for long hours, but it will not promote economic welfare. So, therefore, the physical quality index, life index, is considered as a better indicator of economic welfare. So, what is physical quality? It shows the living standard, how the people are living, what is the life expectancy of birth and literacy. That physical standard will help us to know the physical quality of the life index. So these are the limitations of national income and welfare. National income means erosion of national wealth. See, for achieving higher GDP, larger natural resources are being depleted or damaged. This means reductions of potential for future growth. So, it is suggested that while accessing national income, loss of natural resources should be subtracted from the national income. So, that has to be very much concentrated under environmental basis. National income in terms of US dollars. So the gross national income, previously known as gross national product, is the total domestic and foreign output claimed by the resident of a country. It is consisting of gross domestic product plus factor income earned from where? From the abroad. So it should be minus earned to the domestic economy of the non-resident. So when Indian national income is expressed in terms of US dollars, the former looks very low. So if purchasing power partly method is adopted, India looks better. The last topic of this lesson is social and environmental cost. See, the cost of natural resources for which the firms are not required to pay. For example, river, lake, atmosphere, etc., they need not pay. The use of these public utility services such as roadways, drainage system, etc., the cost of this utility creates through pollutions like air pollution, water pollution, noise pollution, etc. So while proceeding economic goods, many environmental and social bads are also generated. Hence this must be considered while enumerating national income.